Hi, and welcome to the Market Alert for Wednesday, the 12th of May 2021. So again, inflation, the main theme of the news at the moment. Reflation panic sparks a global stock rout. The technical break of supported by the Nasdaq overnight is significant. This is on Monday night. If it does not recapture that tonight, that's Tuesday, last night, equities could be in for a torrid week. Well, it has at the moment. Jim Grant, the Fed can't control inflation. They can't control anything apart from the stock market, where they just keep printing money and pumping it into it. Otherwise, no, they can't. They can't control what all businesses charge for goods and services. So there's a gale of inflation of all kinds in progress that will, in parentheses there, absolutely true, overwhelm our monetary masters. Yes, because once the inflation gets out of hand and is out of control, how can they put or raise interest rates? How can they do this? You can think of the impact on the housing market, on everything, any attempt. So it's going to be a very exciting time going forward, that's for certain, with inflation now actually having taken hold, no longer transitory or a myth. We're in a raging mania. Druckenmiller warns Fed is endangering dollar reverse status. Absolutely, but isn't that the goal? We are in a raging mania in all markets. Even the monkey can make money in these markets. Yeah, buy the dips once they've had a good hammering. That's the key. Any pullback in any time frame at the moment is a potential buy. This is not transitory. Hyperinflation fears are soaring across America. The 1970, here we come. I was only about 10 when we had the last hyperinflation. So I don't really remember it. I do remember the transition to decimalisation and the impact that created with the go from 240 pennies to 100 pennies with the new pound. But as for the oil crisis aspect, no, I don't recall that. But obviously I've read up since. But yeah, this is what's coming, and I spoke to a good friend yesterday who was informing me that he's got a friend who works in a builder's merchant, and they've seen 100% increase in some of the materials since January. So God help us all, I tell you. It's unless you've got some sort of hedge in place to counteract this, then any savings that you may have or whatever, it's just going to evaporate. It won't be worthless, utterly worthless. Nobody wants to work is the new thing from the millennial generation. Job openings soar to record high of 8.1 million, smashing Wall Street expectations. Why work when Uncle Joe will pay you a stimmy check? Well, I think that's the case. And it's not just millennials. I'm not just picking on them. But, it's an interesting time. The implied volatility obviously reacting yesterday as the market moved lower up to 16.29, 15.06, and the 14.39 really is the first day when the market hit the 89% in the daily chart, which I'll show you in just a second. And I'm keeping this in because in theory, if the market is to continue lower, this should go to around 29 on the implied volatility, which will bring you around to about there. 100% increase in implied volatility generally sees the underlying market stop, and it's in the 90s where it does that, except for when you get a situation like this. But all of these others, you get a small increase of 100% in the implied, and the market then resumes. There's always some extenuating circumstance or an exception to the rule, which we had last year. So now we've turned amber on the color-coded version. We're above the 20-bar moving average, but we're not actually below the 20 bar in the daily chart. Let me just find this. This is the daily chart of the Dow. You can see yesterday the volume is very high there. Big sell-off day, down 600 points at one point, but managing to recapture the 20 bar moving average yesterday. Let's just draw in a few support levels using the fibs first. We've got these lows to the left where the market traded sideways, which we sat and watched, and then it managed to break to the upside. So let's find the low. It's going to be this one up to here. And we can get rid of the 38, the 50, the 62 the market came to, but overnight we hit the 78% retracement there. Now, we all know that they'll want the market back on the highs, so let's just draw in some upside targets there. I can't actually attach to the low because that could change, so I've gone off the low of yesterday's bar, but it gives you a pretty good ballpark figure of where we can expect the market to move. But yesterday we saw the plunge protection team coming into the market as well. This is the sell-off. It started in the pre-market actually in the morning. Just after 7, the Dow was the catalyst behind the DAX moving. You can see they're selling off. But in the main cash market, you can see again you've got this pullback of 78% up, back to 89, down from this low to this low is 78, and then sideways for the rest of the session in a trading range of 89-78%, and breaking through in that sideways move there that you can see, before retesting here at 62 from this low. And then prices down as soon as the overnight opened, which we can see trading down to the 78% there, before finding some support and coming back above the 20 bar moving average there. In the German DAX, if I can find it, so we've got the 89 that I spoke about is in the implied volatility is this 89. The market's come back. This is the highest place that the market's come back before it's moved lower. So I like to use the measurement from the day where the market either hit 89 or started to reverse to calculate where the potential bottom could be in the daily chart. So yesterday the DAX trading down to 62, didn't quite make the 78, but well and truly through the 5 and the 20 bar moving average there at the moment. So there are your downside targets. We'll look at all of it yesterday. I couldn't stay at the desk. I didn't feel up to it, so there's no recording. So let's just go through what we've got here. The market selling off from the start. It managed to hold for a few seconds at the low, came up to the low in the futures market, and then just reversed and sold off. And as I mentioned yesterday, watched the S3 on the downside, and the market came down and tested this. We did have a bit of a bounce there for 10 points and then a few more on the downside there as far as official signals were concerned. But in the new signals that I'm developing at the moment, you're actually in from the top of this move. So there's the continuation to the downside. It was just weak with small bounces, and then in the sort of half an hour before the market opened for the cash, it rallied back up to the S2, stopped there, and then it was a straight reversal back to the downside, and then pulled back. And then, as you can see, prices evening trading back up, following the Dow as the plunge protection team came in to assist. But so you can see the DAX overnight following the Dow there, straight back once we got to the DP selling off. You got your retracement there, the market being brought back, and then since has moved down to yesterday's low, where it's currently held, and again done that retracement before it's moved back up to the 200 MA, where at the moment it's finding a bit of resistance at this level. And finally, in the precious metals, we'll start off with silver. We're seeing a bit of a turnaround overnight to the downside. Again, stuck at the 5 bar moving average at the moment. I don't mind if it consolidates here for a few days and then breaks to the upside to get through that $28. But again, yesterday I'm surprised to see the market moving back to the upside. It's certainly very, very unusual. But I'm not going to go on about that in today's alert. Let's just have a look at the high we've got here. I'll just get rid of that 89. I'll just slide that out of the way. So 27.86.5. So we need to get through 28 in order to move to the upside in this market, and the 89% there. The dollar's finding a bit of support. Actually, let's just have a look, see what's happened overnight. So yeah, the slow slide to the downside. Bit of an interesting volume there, trying to hold at the DP level, but then through that with this bar here, and then trying to find a bit of support at the moment to get back above the DP. In the 15-minute, again, it's a very smooth pattern to the downside there, closing below the 5-bar moving average. On one occasion we come back and have a look, but we can see from there to there, that's about a 78% retracement, 50% from this low. So the market at the moment showing a bit of support. Interesting bar for the last 15 minutes there, a bit of an increase in volume as well, but needs to start moving back up to yesterday's high. If it doesn't mind, I would be more than happy if it does. But this is the reason the dollar's finding support. You'd expect this. Trading down to 89%. Well, we know how powerful 89% retracements are. You can see the market sitting there, and you can also see the increase in volume as well, particularly during yesterday, where they were buying the dollar quite aggressively to try and hold prices there. So a break below 89, if you don't mind, that would be lovely. Through the 89.66 low here would be even better, just to keep the momentum to the upside with the precious metals. But then really haven't got to worry too much, have we? Because inflation is out of control. So yeah. And then finally, just a quick look at gold. This had an interesting day yesterday. It moved lower, came back, and overnight showed a bit of weakness again, but that's because of the US dollar. Like I say, I'm surprised these sectors haven't been, or the precious metals sector hasn't been slammed, to be honest. But at the moment, it's holding up, because the higher this goes, the more fragile the financial system. The higher it goes, the more people will want to get into it, because they can see there's a problem with the financial system. If they haven't already clocked it, I mean, it's only been going on for 13 years, but it does take some people a moment or two before they can see what really is going on in any aspect of government policy, and that's all I'm saying on that. So yeah, let's see what happens today. Let's just go back to the DAX though. I don't know if one thing that I forgot to do. Actually, there's a couple of things I forgot to do. The yield is back above 162, which is starting to move back up as well. So if we quick look at the 5-day, you can see they're starting to move back up. News today, we've got quite a bit. We got Bailey out again today at 10 a.m. And yeah, that's about it. I mean, the rest is the normal stuff. CPI is another interesting one there at 130 for the US. And then just finally, let's just go back to the DAX, which will be this one. Let's just compress everything, have a look, see where we are in the bigger picture. We know we've traded down to yesterday's low, and we've managed to come off that low. So very important for prices to remain above this low when the futures market opens. If it goes through here, then we could see another slide down again, a long way down though to the next S3 because of the size of yesterday's range. On the upside, we've got the close, the DP. If we can get through the DP, there is a chance that we could start to move to the upside. Don't underestimate the power of the Fed to rescue the stock market, either by selling VIX contracts to reduce the volatility, or coming in and buying S&P futures from the seller in the Fed reserve there. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.